Hey, good morning. Let's go over today's trade plan. So in the overnight session, we again saw a strong buy response near the balance low from yesterday, and the market is trading back up near yesterday's high. At this point, heading into the open, the buy side is again very dominant, and we can still get a move up to the 2076 to 2079 area, which marks the upper edge of the current range that the market is trading in. And if there's a lot of upside momentum, ES can even go up and test 83 quarter and potentially 85 half, and finally 87 to 89 half would be a range extreme. But even short term, if we continue to balance above 61 half to 62 half, and we continue holding above pre-market support, above initial support, then that would leave the door open for a move at least up towards the 76 to 79. The world markets overall are rallying today, and US is simply catching up at this point. So our bias heading into today is going to be bullish above 57 half to 59 half and 61 half to 62 half, and we are going to be cautious on shorting 68 to 70 at this point. Technically responsive sellers can still be active at that area, but the market rarely does the same thing 2 days in a row, and it's unlikely that we're going to fail at that zone today. It's possible, but the way that the market is setting up right now, it looks like we are setting up for a test of 76 to 79, and then that's the inflection point where responsive sellers can still be active on first test. But if you're going up on very strong momentum, then you probably want to be careful even over there, just because everything is rallying right now, and you want to make sure that if you are taking a short either at pre-market resistance or initial resistance, that there is a lack of upside momentum. So what you want to look for off the open is not simply weakness, just even a lack of upside momentum can be enough to push ES down into 6150 to 6250 and 57 half to 59 half. So what we're really going to be looking for off the open, if the bullish scenario is to play out, is the NYC tick holding above zero. The advanced decline line is bound to open at a very high reading, simply because we're opening on a very large gap up. So we're not going to pay so much attention to the AD, or at least the absolute value of the AD, but you can look at the trend of the advanced decline and make sure that we're not getting a complete downtrend on the AD. So as long as it's even maintaining a fairly high level, that's okay. Probably don't have to pay too much attention to the advanced decline, but on the NYC tick, you do want to see the tick holding above zero and printing some decent values, right? Not just plus 300, but holding above zero and printing, plus 900 to 1,000 on the upside, or at least above plus 700 to indicate some decent upside momentum. And then we can go up to 76, 79 and possibly even test the previous week's high at 83 quarter. So we know that the market is trading at a very aggressive price. It was trading at a very aggressive price yesterday, and there was a lack of upside momentum, which resulted in that downside push. But the same scenario does not have to play out today. The market has built up some more support here in the overnight session, and today does not have to be a repeat of yesterday. And the buyers can actually carry this up to 76, 79. That is the primary upside objective. And then beyond that, if there is a lot of momentum, we can go higher. But just realize that 79 and 83 quarter, those levels do mark the upper edge of the current balance area. And so we may not go too far beyond 79 and 83 quarter. So by that point, the range is going to be quite exhausted, and any price above that is just going to be extremely risky. It's going to be at a very high level, a very aggressive price, and again, you want to see that continued momentum. Anytime you start seeing a lack of momentum, you can get profit taking off those zones. So that's the upside scenario. On the downside, 61 half, 62 half is the immediate short-term support in pre-market heading into the open. 57 half to 59 half is the initial support zone and the primary support on the day. And below that, we're going to be using 52 half to 54 half as the micro bull bear zone to establish our directional bias on the day time frame. Now, if the buyers are to maintain control, then ideally you don't really want to even see this break below 57.5 to 59.5. But if you're coming down and there's really not any big downside momentum, then 52.5 to 54.5 is really the final spot where buyers can still step in. And if you break below that, then there's not really a whole lot of support in the market until 43.5 to 45 and 36 quarter to 38 quarter. And if you're breaking below the bull bear zone, then even the 43.5 to 45 may only provide a small reaction. It doesn't necessarily have to reverse the market back up. It's not really a very strong support area. So if you break 52.5 to 54.5, then we could be looking at a move back down into the gap fill and 36 quarter to 38 quarter. So that's the secondary scenario, the bearish scenario, but the primary scenario for now is going to be the upside scenario, and that's why we are going to be cautious on the short side off the open, be more active on longs. But in order to be active on longs, just make sure you're seeing consistent and sustained upside momentum. So if you get just a lack of upside momentum, or you start seeing negative movement on the tick, then you want to be careful, because buying at these aggressive prices is risky, right? It is a very aggressive move to be entering at this level, and if you can't identify a high reward to risk trade, because if you're buying a pullback here, or even buying a breakout, your first target is around the 76, 79, and so you're going to use that as your target to calculate your reward to risk. So if you're not finding a good spot to get on board, then simply wait. You don't have to be involved in every single movement, so just be patient and wait for clarity. If off the open things are very mixed, and it's unclear whether there's any momentum or not, it's just kind of chopping in a range, then again, there's no setup there. That's not a trade. So in that scenario, you would just wait for the market to give you either a good trade location or give you some more clarity on which way we were headed. And until then, if you're kind of in the middle of zones and there's really no edge, then just sit out and wait for a better setup, right? Now, if you're buying a breakout, which is on high momentum, then that's a momentum-based idea, and that can still be taken irrespective of location, because when you're trading a breakout, timing is more important than location, and it's important to get on board early on the breakout, and the underlying environment has to support it. So we already know the AD is going to be at a very high level, but then the tick has to also be printing some very high values after it kind of stabilizes in the first few minutes. Then you want to see it rising and going up towards plus 1,000, plus 1,100, and sustaining above zero. So that's the picture we're going to look for off the open. So let's see if the buy side can maintain control today. They failed yesterday, but again, it does not have to happen today. And now the market has built up more support, and we can still go up to 76, 79, and potentially 83 quarter, 85 half, and in the event of a range extreme, 87 to 89 half can cap the upside. So those are the main ideas for today. Let's see if the buy side can maintain control above the initial support, above pre-market support, and we'll take it from there.